Hey everyone, welcome in to another daily editorial here in the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, what I want to focus on mostly in this interview is the relationship this year so far between the US dollar and commodities. One thing that I think has really kind of flown under the radar is that the US dollar is in a fairly substantial uptrend all of this year. Pretty much at the very beginning of the year, we had the low in the dollar index just above 89. It was 89.17. And ever since that time, the dollar has been climbing. Most recently reached a peak of 92.53. We're testing or coming close to testing that out again just in today's trading action. But Jordan, what do you think about the relationship right now between the US dollar and commodities, and especially the dollar's bounce in the last few days seems to be putting some pressure on commodities?
Yeah, I mean that's important. An important note there. The last couple days, but I will say I think that commodities and hard assets and the stocks within the commodity spectrum, they've started to price in a dollar rally even before the current week. So I don't think this comes as a total surprise to a lot of people. I mean, we've seen the stocks, whether it be silver stocks, gold stocks, uranium stocks are starting to sell off, rare earth stocks, for example. All of these sectors have been selling off, and most of that was happening before, this rally in the dollar has started to gain traction. So I think this was a risk. And the other thing, Corey, which I don't know if we talked about this recently, or maybe at the end of last year, the dollar, just the net spec positions in the dollar were hitting an extreme. The dollar was coming down to an important support level. I don't have the chart in front of me, but where it bottomed really close to that level. So it made a bit of a double bottom, like if you're looking at like a 1 year, 6 month chart, and it was at an area of very strong support while sentiment was really stretched in the bearish direction. And I just think, I'd probably say I think you're going to see the dollar go to 94, maybe 95. I mean, we have seen, at least in the last 2 weeks, we have seen some spec shorts have to cover, so that's good. The net spec position is looking less extreme. But given the degree of the sell-off in commodity stocks, Corey, I don't, it doesn't look to me this is just going to be like a couple month thing, and then we're going to see the dollar fall out of bed again and commodity stocks zoom higher. This is something where it's going to last most of this year, unfortunately for commodity bulls.
Okay, let's talk about that in a bigger picture, because something you and I have been chatting about off mic is the potential counter trend year. So that means the dollar rally continues and commodities sell off. How likely is that to happen? It sounds like you think this could last all year.
Well, I wouldn't say all year. I would split the difference a bit. I mean, just generally speaking, I would say most of this year. I mean, we're a week away from being through 1/4 of the year. I mean, I don't think it's going to last the entire year, but maybe through summer, maybe around that point in the fall it might end, or maybe it'll be a little bit earlier. Maybe it'll be in November. I don't know, but I think that's the kind of the timeline that people have to keep in mind. This is not, I mean, it is a counter trend move, but it is a significant counter trend move. I wouldn't say it's just a short-term rally, just given the degree of damage that we've seen in so many commodity sectors.
Does this have anything to do with inflation and higher inflation expectations heading into this year, and this year potentially, at least so far, under delivering on those inflation data expectations?
Well, I think what's interesting, and I don't know if you and I have talked about this, but in the last month or so, I have in 2 or 3 of my updates, I've pointed out that when you see at least in the last 4 years or so, that when the dollar has started to rebound, you've seen rates come down and bonds go up. So in the last 4 years or so, the bonds and the dollar have been positively correlated. And at the same time, the gold to silver ratio has also been positively correlated to that. So what we're looking at is, I don't know why the dollar's rebounding. I mean, aside from the fact that it came down to a significant support area, it was really oversold. Sentiment was in position for a rebound. There's all of that, but it could be because money is going back into bonds, and so foreign money, a little bit of foreign money perhaps, and so they need to buy the dollar, they buy bonds. So I don't know if that's part of the linkage, but I think it's connected to bonds. I mean, it's positively correlated. And with regard to inflation, Corey, a month ago or so, or 3 weeks ago, people were wondering, we have the reflation trade, the market expects inflation, but gold was correcting, silver wasn't really doing much. And so my takeaway from that is the market doesn't expect inflation to get out of control this year. For me, that was the takeaway, because if the market did expect that to happen, gold would have been joining in on that move. And so the markets, given how precious metals were struggling, the markets were telling us that while they did expect higher inflation this year, they weren't really expecting an acceleration or inflation to get that much out of control, at least yet. And so now we're seeing that thesis is being proven right, as the dollar has put in a clear bottom. It's rebounding. It's probably going to be sustained over the coming months. And at the same time, we're seeing bond yields are finally dropping. Money is going back into bonds. That's going to be a good counter trend move. So that's going to keep a lid on inflation and inflation expectations for most of the year. Now, eventually, I will say, the dollar, it rebounded from 89. So that's a significant support level. So ultimately, the way the dollar chart is setting up is, I think at some point, could be later this year or next year, after this rebound potentially rolls over, that's really going to be the big move where the dollar breaks below 88, 89. That's going to be really significant. That'll probably coincide with inflation expectations starting to accelerate again. However, I mean, that move is not 2 or 3 months away, probably not even 6 months away. For here and now, for most of this year, this is going to be a counter trend year where the dollar is going to be holding up or rallying, and commodities are going to be correcting.
Okay, so it just speaks to that counter trend move. Let's go into a little bit more some of the individual precious metals, at least, starting with silver, because as much as silver held up better than gold, we are starting to see a bit of an underperformance in the silver price compared to gold, but also looking at the silver stocks and even the silver miners ETF, SIL, it is generally weaker than the silver actual price on a weekly basis. When you're looking at some of these silver stocks and already understanding that a lot of them have pulled back fairly significantly, is there still some downside here? How much damage has been done to these charts?
Well, I mean, looking at SIL and SILJ, I want the listeners to pull up monthly charts of those if you can, monthly candle charts, because they had some pretty nasty monthly candles right around resistance. And the silver itself has been pretty weak. I mean, I've been talking about $22 as a target for weeks and weeks. And this last weekend update I did for subscribers, I pointed out, if you look at the consolidations in the 2000s, towards the end of those, silver had come down and had tested, in some cases, the 400-day moving average before, beginning the next great leg higher. And the 400-day is currently at 20.77. So we'll just call it 21. I mean, the lows at the beginning of this correction in silver were at, I think, at 22, a kind of double bottom there. So that to me looks where silver is headed. And people who own silver stocks, including me, I mean, this isn't surprising. The silver stocks have been lagging silver badly in recent weeks. They've been telegraphing this sell-off, and now we're getting confirmation from silver weakening. I don't know if it's lost 25 yet, but when it loses 25, it could dump pretty quickly down towards that $22 level, and maybe it'll go a little bit lower and test the 400-day at 21. But this is, I mean, it's tough right now. The silver stocks are really weak. We're probably going to see more selling there, but the larger important point is, it did the same thing during the 2000s bull market, and then it bottomed and had a really big move higher. But at least here and now in the near term, I don't expect silver to turn it around. And it's underperforming gold now because given the kind of macro developments, at least with the markets, where we have money going into bonds, dollars rallying, the gold silver ratio rises. So, now silver is underperforming again. And in the macro narrative now is the market is telling you, okay, inflation will be contained this year. It's not get out of control. I mean, that's worse for silver than it is for gold. So that's why we're seeing silver struggle. And unfortunately, here in the short term, or the medium term, it's probably going to continue.
So, Jordan, does that mean that we could see almost a fishing line sell-off in some of these silver stocks?
It's very possible. I would prefer that happens. I mean, I have not been buying anything silver for a long time. I mean, we've trimmed positions, I think 3 times in the last 4 or 5 months. I mean, it's been difficult because a lot of people have been wanting to buy silver stocks, and we've been saying it's not time. But looking at some of these charts, I don't know if a fishing line sell-off is imminent. It might take a little bit more time, but I think it's a possibility. It's something to keep in mind. And these things have already been correcting and selling off. And so if we start to see more losses, then we get a fishing line. That's going to be the time you want to buy. So we're not quite there yet. I would want to also, Corey, we would want to see silver get closer to $21, $22 before we jump in the market, even though the stocks are leading silver to the downside, and they'd probably start to bottom before silver itself bottomed. You want to wait for silver to get closer to 21, 22 before you dive into these stocks again.
How about for gold then? Gold has rebounded a little bit, but it really has, or at least some of these charts are looking like it's nothing more than another kind of dead cat bounce during this 7-month-long correction. Some people are still trying to make the argument that the recent low is going to be the low, and we could see a bit of a gradual rise from here, but I don't know. It doesn't sound like that's your train of thought.
Yeah, I mean, from a macro fundamental perspective, I mean, given that gold, well, I guess we could be moving into disinflation mode, which is bad for the sector, but gold was selling off because of higher inflation, higher yields. Now we're seeing the reverse of that. But look, if the dollar's rallying and everything's selling off, gold is still going to get hit, even though it'll be the least amount compared to all these other things. So yeah, we'll see. I mean, the support target we rebounded from 1675 to 1690. There's that, and then there's also you could say 1575 to 1600 in that area as a 50% retracement. So if you look at sentiment in gold, like the daily sentiment index, the 20-day of that is at an extreme, which is healthy. But if you look at the net spec positions in gold, even though it came down a lot, it was still, nominally speaking, it was still around 200,000 contracts. So you've seen a huge decline there, but you can't say that's not going to go down to 150, or 170. So there's room for more spec selling in gold, even though we've already seen a huge amount. So that would be my concern. But I'm just, like I said last week, Corey, you got to focus on quality, and we're going to see a lot of great buying opportunities in a number of stocks, but we're not quite there yet. Unfortunately, I hate to tie gold with silver, but if silver is going to come down to 21 or 22, you should probably wait for it to get pretty close to that before diving into anything, even gold and gold stocks, unless you see those fishing line on an individual basis.
All right. Well, Jordan, in terms of portfolio management, then, you mentioned you already cleared out of a lot of your silver positions, and I assume some other positions in other metals as well. But if people are still holding some positions right now and they're hearing about the potential weakness that could come, is it too late to be selling those positions and building up cash positions?
Probably, unless here's the thing, you want to cut losers. So if you have losing positions, and I kind of use 20% as a mental stop loss. And look, the tough thing with these questions, Corey, I'm not trying to dance around it, but every investor is different. So everybody can act differently. But generally, that's what I like to do, cut losses. So that would be, I would review the positions. And if this is, stuff you've owned for, I mean, unless it's something you like just bought and it's down 5 or 7%, I mean, that's okay. You can hold that. But I mean, if you have positions you've owned for a while, they've weak, they haven't performed well, they're down close to 20%. Those would be the ones that I'd want to sell. Not the ones that are up that you have really good entry points on, where the companies are great, they're going to turn around quickly. Those are the ones that I would hold. What I like to do, cut the losers, cut the laggards. And, if you have something with a really good gain and it's given a lot of it back, it's still a big position. You could trim a little bit of that, but that's what I like to do. But at the end of the day, you have to make sure that you're invested in the right companies, because some companies are going to come back quickly while others, they're just most of these things, Corey, they're optionality plays. They're just going to follow the gold price. So that's the trick. You want to own the stocks that have the most potential, the best fundamentals. Those are the ones that are going to get the most buying when the sector starts to turn around. Other names, they're probably going to take a lot longer to turn around. So that's the problem. You want to try and be in the companies that are going to turn around first.
Okay. Well, Jordan, we're going to wrap it up there. It's always interesting chatting with you. Sure wish we had a little bit more of an optimistic outlook for the metals, but in all fairness, we do need to look at the charts and understand what is happening here, especially in terms of price action and just general investor sentiment. And who knows, it does look like, unfortunately, that investors still not all that attracted to the precious metals. Maybe that'll change, but the charts are sure telling a slightly different story. Jordan, thanks again for your time. I'll post a link to your website below, and we will chat again next week. Have a great rest of your week.